Well, the agreement with the EU and US is far from final, as we just were talking about, with many details still to be ironed out. Meanwhile, US negotiators are jumping right into their next big round with China. Talks with that country began in Stockholm today. Joining us now, Zoe Liu, Council on Foreign Relations Senior Fellow, as well as Terry Haines, Pangaea Policy founder, and Yahoo Finance's Washington correspondent, Ben Worschel. Ben, let's start with you here. We've got this deal with the EU. Now they're going right to these negotiations with China. What should we be looking for?
Yeah, so this is going to be at least 2 days of talks in Stockholm. As you mentioned, they kicked off just a couple hours ago. Trump just a couple minutes ago confirmed that and also said his focus there is on market access. He wants China to open up to the U.S., which is commentary we've heard from Treasury Secretary Bessent as well, who's the leader of the talks. The bottom line, though, in terms of what markets are watching here, is an additional tariff deadline extension. Right now, we have an August 12th deadline where tariffs could snap back to the current rate is 30%. It could go back to triple digits if there's no progress there. That's agenda item number one for these negotiators as well as for markets. Treasury Secretary Bessent has said that is likely, and so a lot of signals are there that extension will be granted for perhaps another 90 days while the negotiators continue on a range of other issues. Another big issue being watched here is whether there's any announcements in terms of a Trump-Xi meeting, which is expected to occur later this year if progress continues to be made. There's a bunch of fronts which that could happen. So those are the two big immediate term issues. But these are talks that now have a huge number of much more complicated issues they have to get into. Trump was talking about currency last week. That's just one of these many issues that they have to figure out. Not expected to be dealt with today, but they kind of beginning that process in the coming weeks. But that first deadline, of course, is not having tariffs snap back in just a couple weeks' time.
Right, exactly. Zoe, is there anything we can sort of take away from the way that the EU process works and extrapolate that for China?
Julie, I do not think the EU's model is going to be a good template for US-China negotiation for two reasons, primarily. The first one is China has been the only country retaliated against US tariffs very resolutely and very firmly, whereas the EU has not been retaliating to the same extent as China. And then secondly, the Chinese government seems to be aware that on the one hand, the U.S. market and U.S. manufacturing sector is very much dependent on input or intermediate part imported from China. And then on the other hand, through export controls in particular, China knows exactly where to hit back. So from that point of view, I do not think the EU-US template is going to work for China.
Terry, what do you think? I mean, and clearly it looks like the administration is already managing expectations that a China deal is not getting done this week, right? In fact, they're likely to push the deadline back by maybe 90 days.
Great to be with you, Julie. Two things. First, directly on the investment. The concern is from the United States side is that they don't want Chinese investment in a lot of areas. I mean, let's remember the United States forcing TikTok out of the Chinese version of TikTok out. Let's also remember there's now a grassroots effort to stop China buying farmland in a lot of different places. So there's a lot of real national security concerns. The way Bessent has put this is he uses an above the line, below the line deal. But below the line, kind of normal goods, if you will. What the United States is trying to do is normalize trade with China. That's very good news for markets. Above the line, of course, national security, armaments, that sort of thing. So chips, we're normally not going to deal on those things. But secondly, the way that back to your point about the EU, the way markets have been looking at these deals is kind of the fact of the deal is much more important than the details. That's generally the case, and the deals will stick. On China, though, what you got is a situation here where what markets think is that we've already dealt with this kind of rare earths for some chips deal. That's not so. Lutnick finesses this. I'm not saying he's lying or prevaricating, but he is finessing it because the export licenses on both sides aren't done, frankly, and the flow is not happening. So the first job in Stockholm is to get that flow happening. After that, I think they can work on normalizing trade relationships. But there's a lot of geopolitics here that are going to play in too.
Terry, I'm also curious just to get your take on the EU agreement, right? And to your point, a lot of details still to be worked out, but we got the headline about the agreement being done.
Sure. Three things briefly. One is, as I say, the fact of the deal, I think, is much more important than the details. The details will take a while. They take a while, frankly, because, as Ben noted, there's 27 countries that have to walk through this, and that's going to take a little while. And that's been one of the big sticking points on a deal. Secondly, I'd look for a positive. I'd look for a geopolitical positive here, and geopolitical risk is something that weighs on markets. This is the United States and their allies together with non-aligned countries in different deals, kind of coming together to stem China's rise a little bit, and it's a positive geopolitical moment for the Western allies, I think. Finally, what it says to a lot of the conventional wisdoms that were negative on tariffs to begin with is that what is in the mutual interest of the United States and the European Union is continuing to increase trade, and they will do that even with some tariffs and some trade restrictions. So I think all qualified market positives.
And Zoe, let's take that last bit about sort of the mutual interests. Where do the interests of the U.S. and China align that could allow some progress here?
So far, the overlapping shared interest between the United States and China perhaps has dramatically narrowed, not just because of starting from 2018, trade tensions combined with export controls, combined with broader geopolitical tensions, such as relationship between China and Russia in the context of Russia President Putin's invasion of Ukraine. But on top of that, Chinese government has already made the dedicated resolution to pursue self-sufficiency or self-reliance, not just in terms of diversifying trade away from the United States, given rising trade tensions, but also from financial sovereignty, developing alternative non-dollar-based financial infrastructure, and more importantly, on tech. So from the short term, China, especially in the context of a current U.S.-China trade negotiation, in the short term, China would want a tactical agreement from the United States in terms of relaxation of export controls. But in the long run, what China wants is to achieve better market domination, not just in terms of lower-end manufactured good, but made in China, cheaper, better, and of higher indigenous tech content. So from that perspective, the overlapping interests between the United States and China has dramatically narrowed.
Yeah, and it feels like a tall order maybe to get all of that. Ben, what do we know about how long this round of negotiations is going to last? Is it just today and tomorrow, and then they kick the can a few months?
Yeah, I think that's about right. This could push into Wednesday. I've heard signs that they could extend it by a day if there's more to talk about. But yeah, it's only for a couple days this week, and then a lot of the trade negotiators actually have to get back to Washington because of other deadlines that are looming on for other countries that we've been talking about for this Friday. But yeah, this is expected to be a kind of limited conversation on a couple of these issues. One other issue I'll add to that we haven't brought up is oil there, especially in the Russian context. We had some news from President Trump this morning. He's going to lessen the deadline for Vladimir Putin, and if that doesn't go in his view, he's going to move forward on his plans for secondary sanctions or Russia or secondary tariffs. China's watching that closely because they're obviously a big consumer of that. So a lot of details there to remain to be seen, but that's another topic of interest for sure this week.